Hey traders, Marcello here, founder of the Day Trading Academy. Today I wanted to do an introduction into day trading. Now on this channel, obviously, I do a lot of travel stuff. If you guys are watching this on the day trading side, for those of you that don't know, I've been traveling around the world now for, I want to say, 8 years. I have been very, very lucky to do that, with day trading and the other businesses that I own. And so what I wanted to do in this video is just do an introduction into day trading, the stock market, how it works, how people make money with it, and also be completely transparent that it isn't necessarily the easiest thing to do, okay? If you guys have any questions, don't hesitate to leave them here, hashtag Ask Marcello. I'll be happy to pull all your questions and do them, or answer them here on video for you guys. And also don't forget to subscribe here to the channel. I'd love to obviously hear your comments on all the things I'm talking about here on the video. So to make it very simple for you guys about how people make money or how people invest or trade in the stock market, the idea is that there's a financial instrument. It can be a stock, it can be a currency, it can be a futures contract, which is what we specialize in, and there's a value for that product. Let's just call it futures, for example. I'll do stocks to begin with. So if I think the value of a stock is going to go up, I'm obviously going to buy it. This could be because Apple, a really, really simple example is Apple revolutionized the smartphone business. So because they became the primary person or the primary company that everybody wanted to buy phones from, right? They're like the premium phone. I'm gonna buy their stock because I think it's gonna continue going higher. Another example would be Warren Buffett owns Berkshire Hathaway. He's made a ton of money, a ton of returns over the last, 20, 30, 40 years. I think he's dinosaur age at this point. But I'm gonna buy his stock because I know that he is going to make more and more money over time. That's really the premise behind making money. Now, the analysis of whether the stock is going to go up, that's what really changes over time, okay? Now, on the flip side, we can also make money if the value of a stock is going to go down or if the value of a financial product is going to go down. So in that instance, instead of buying it, what I do is I short it. And without kind of getting really technical, because I didn't want this video to be really, really technical, the basic premise is that I'm going to short the stock because I think that the value of the stock is going to go down. So I don't want to say bet. I think the right word is speculate, because betting indicates that there's no analysis involved, right? It's not gambling. So if I think the value of a stock is going to go down, well, we'll do today's instance of Apple, because they're not really coming out with any new products on the iPhone and everybody else is kind of making iPhones or cell phones that are as high a quality and has the same features. I, for example, am a Samsung man. So if I think the value of what Apple is doing is going to make the company's stock go down, then obviously I'm going to short it. And if the value of the stock goes down, then I make money because I chose the right direction. That is, in a very simple bubble, very simple explanation, how people make money in the stock market. So another way of looking at this, obviously, is going to be that there are going to be different levels of analysis that people can make. And we essentially have fundamental analysis and we have technical analysis. I prefer technical analysis because I'm lazy and I don't want to stay up reading reports and all kinds of things. So I'll explain to you what the difference is, and then I'll explain to you what the time frames are. Technical analysis is just if you want to show them here what you see on the charts, it's literally lines and graphs and dots and all that good stuff. You guys will see it here on the other camera. This is basically technical analysis, and the decisions that we make to buy and sell, because this line is here, we buy here and the market goes up, or because this line is here, we'll sell here because it's more than two lines, we'll go down. I'm making it a very simple explanation for you guys because I don't want to make it super, super technical. Now, fundamental analysis is where we look at the fundamentals of a company. If the CEO is making a good decision, if they're selling revolutionary products and they're going to make a lot more profit, those are fundamental things. So it's really either one of the other when it comes to fundamental or technical analysis, okay? Now, the classic view, and what most of you guys probably understand, is that fundamental analysis. What they try to teach us over time is that, well, yeah, you know, in 30 years, the company that we're investing in should make money. They should continue to make more profit. They should keep doing better because they have good management. And so, you know, in 30 years, obviously the value of the company is going to continue increasing. And that's the classic way of how we view things, right? Even with a retirement fund or your pension, a lot of times people will manage it based on the dividends. A dividend, if you don't know, is if a company makes money and they pay the profits to the shareholders, with other people who hold the stock. So if I own, I don't know, 10% of Coca-Cola, like Warren Buffett, and Coca-Cola pays dividends, then they're going to pay me part of the profits. I prefer technical analysis because I think you can make a lot more money with it in the short term than you can with fundamental analysis. I also feel that it's a lot easier to make money with technical analysis rather than fundamental analysis. And I really do believe, and I'll be honest with you guys, I'm very lazy. And I think most of us, you know, we don't want to work that hard. In the beginning, obviously, this day trading world or investing world is going to be difficult to learn, but over time, you're going to be able to learn it. So fundamental analysis involves watching the news, you know, reading reports. I don't want to do that amount of work. So what I prefer to do is you open up your computer, you do a quick 5-minute analysis, you start trading, and you're done within an hour, maybe 30 minutes. And that's it, you're done. Day trading, I think, over the years has evolutionized, really, right? So we don't necessarily have to just invest in stocks. We can do other things like what I prefer, which is futures, and I'll mention that to you here in a moment, guys. So now we get into the time frames. There's much different time frames that we can use to be able to trade with. There's obviously short term, there's medium term, there's long term. I believe, in my humble opinion, since I've been in this industry for 15 years, I believe that short term is better because it not only gives you an ability to learn quicker, because you're going to be able to practice a lot more, right? Session after session after session. At the end of the day, it's the amount of hours that we put into it, but also because you can make a higher return with the shorter term time frame. If you think about the market and the way it moves, if we look at a very long time frame, let's say months or years or weeks, it's going to take a while for the market to move where we want it to. Whereas if we focus on shorter term, which is called intraday trading or intraday trading, where you only trade during the day, you don't hold the position from one day to the next, you literally can trade in 5 minutes or 10 minutes or an hour, as long as you close the position the same day. So I believe that's the best avenue for most of you guys, because I think it'll give you the best practice, right? Because obviously if you're able to do one practice session in, let's say, 45 minutes or an hour or 30 minutes, you know, in a span of an 8-hour day or a 2-3 hour day, you can learn a lot quicker than having to make a position that lasts 3 weeks, okay? So that's what I believe in terms of that. Now, in terms of the best markets to trade, and one thing I'm going to be honest with you guys about is there isn't one best way to trade. Even though I teach people how to trade and I teach them with the strategy that we developed at the Day Trading Academy, I don't want you guys to think that you can trade another way and be successful. And I think I'm probably one of the only people that'll be completely honest with you guys when it comes to that, right? So it doesn't matter if you trade Forex or stocks or futures, etc., etc. One thing that I would tell you guys, in my humble opinion, is I would not recommend that you guys start with Forex or something like binary options, because there's a lot of manipulation in those markets and there's a lot of things that we have to analyze to become successful. One of the things that I'll tell you guys about trading is that it's 90% psychological and 10 or 15%, so 85, 15 or 90, 10 or 15% technical. So the strategy that we're going to learn, the lines and everything that you saw a moment ago, is really only 10 or 15% of what we have to learn. So if that's the case, and we need to make sure that we focus on the psychological component or the emotional component of trading, it's going to take us a lot more work to conquer that part, because obviously, you know, we don't want to look in the mirror and admit we're wrong. We don't want to look in the mirror and admit that it was our fault that we did something, right? So the idea, and if you want to be successful doing this, you want to make sure that you focus on the psychological part. When it comes to day trading Forex or stocks, there's a lot of homework involved. In the case of Forex, you know, you need to look at 10, 20 screens, what everybody kind of thinks day trading is, right? And then after that, you have to watch 10 markets. I know a lot of traders that have to sit there all day just to look through all this stuff, just to find what they're going to trade. Whereas if you trade futures, for example, it's one market. You literally, at the beginning of the morning, you open up your laptop, you do an analysis, you start trading, and you're done within about an hour or two. Our traders, I would say that the shortest amount of time that they trade is about 20 or 30 minutes. Stocks is something that I would recommend for beginners to trade, but it also depends on the amount of work that you have to do. Because obviously with stocks, similar to Forex, you have to do a screening to find the right stocks that you're going to trade. And in certain respect, for example, something like penny stocks, I think that people underestimate the amount of work that it takes just to find the right thing that you need to trade with, right? The right stock. So that's why I recommend futures. In my humble opinion, that's the best market to learn on. It's the best market to trade for various reasons. One, it's very, very simple. Same market all the time. We don't have to do any homework. You know, who wants to sit there at 6, 7, 8 p.m. at night sifting through news and reading reports and finding the right market to trade? Just very simple. Now, I don't want you guys to believe that futures doesn't have any downside either, right? Because obviously futures is what's called a more leveraged market. A more leveraged market essentially means that you can make a lot more money with less. So you can make a lot more money with $1,000 in futures than you can with $1,000 with stocks or Forex, for example. So in the futures market, you don't have to borrow money, which is called margin. You don't have to borrow money to make more. And obviously, if you borrow money, if you lose it, guess what you have to do? You have to pay it back. Or if you borrow money, you pay interest. In the futures market, we don't have any of that. But at the same time, in futures, since it's more leveraged and you can make more money with less, you can obviously lose more money as well. So that would be the drawback that it comes to futures. So those are some of the things when it comes to trading. Obviously, the idea with making money is just a matter of knowing what direction the market is going to go, depending on what financial instrument you're going to trade, right? If you think the value is going to go down, you short it. If you think the value is going to go up, you go long. It's really that simple. Obviously, learning how to do it is a bit more complicated. I don't want anyone to believe that this is going to be something that's simple, right? Or something that you're just going to learn overnight, because that's not the way it works. One thing I also want to share when it comes to day trading is it's going to be the hardest way to make money the easy way, okay? So obviously you can make a lot of money day trading, but it's not necessarily guaranteed. It's not necessarily going to happen from one day to the next. And obviously it may not happen in a week or two. I know people that it's taken years for them to learn this. At the end of the day, I believe if you are going to learn this, once you do pick it up or once you become consistent, it doesn't matter how long it's taken you, right? Because now you have the financial freedom to be able to do whatever you want, and you also have the capacity to make as much money as you want, depending on how you scale the positions that you have. Because the day trading for me, the stock market, is the only thing that's infinitely scalable, which means that it's the best business in the world, because if you want to make double the amount of money, you just double the amount of positions that you're trading. Now, obviously, it isn't that easy. I don't want you guys to think it that easy, even though it actually is. But obviously, when you go from one position to two, or you go from 2 to 5 or 5 to 10, obviously that carries a psychological load that we need to account for. And obviously, that's different for everybody. One of the last things I do want to mention when it comes to day trading is it's important to realize that even though you can make a lot of money trading, you're not going to necessarily pick it up overnight. Okay, I think I mentioned this in the video before, but I really want to hone that in, because you can do very well, obviously, and day trading is one of the only businesses that I know of. If you guys know something else, leave me a comment here on the video or on the page that this is go on. But day trading is the only business that I know where you can make a lot more money when things are bad than when things are good. And the reason why is because there's a saying on Wall Street that the stock market goes up the escalators but down the elevator. In a crisis, they jump out the window, right? So when there's a crisis like the one that we had in 2008, 2009, a lot of traders, especially the ones that trade intraday, we make money based on movement, based on volume or volatility. If you don't know what volatility means, it's the amount of movement in a given period of time. Volume is the amount of transactions, but volatility is the amount of movement based on a period of time. So when we have a crisis, a lot of people get nervous. A lot of people are scared. A lot of people are afraid. So they make a lot of rash decisions that they otherwise wouldn't necessarily make or have to make, let's say. And they make, the market goes up, the market, let's say, crashes, goes down, they get scared, they sell their position, market comes back up, they're like, oh, it's going to come back up now. They buy and then it comes back down. So there's a lot of irrational movement and irrational emotions that people have. And traders thrive on that because we make money on the little swings in the market. If you guys are trading something like tick charts, which we trade, which is transactions rather than periods of time like candlesticks, you can actually take advantage of that because by looking at transactions, you see more transactions on the chart. So that's one thing I do want to let you know. One of the things that I've always thought about and one of the things that I want everybody to understand is during the Great Depression in 1929, okay, very, very bad time economically for the world, there were more millionaires created during that depression or afterwards than at any other point in the history of the world. Let me repeat this because it's important. During the Great Depression in 1929, there were more millionaires created than at any other point in the history of the world. Now, I do believe we're walking into another crash, another crisis, so to speak. That's my humble opinion. But day trading, if you own a business, if you sell food, if you sell cars, if you sell real estate, no matter what you do, during a bad time, we're not going to be able to make money or we're going to lose money, right? So day trading to me is the only profession or the only business that I know where we can actually make more money when things are bad than when things are good. So I'll leave that with you. That kind of last piece because I really do believe that anybody can learn how to do this, and it's important that to know that even though it's hard, it's not easy to learn. I do think everybody can actually learn how to do this, and it doesn't matter what background you're from either. So I'll leave you guys with that. Let me know if you guys have any questions. Hashtag Ask Marcello. I'll be happy to answer them here on video. Don't forget to subscribe and let me know your thoughts or comments on the video.